Well, hello, everyone. Don Garman here again for Mirador Capital Partners, February 2026. Here we go. Um, as those of you who know me would probably agree with, in general, I can find humor in nearly anything. And having said that, I find this to be a very serious time. So I'm going to jump in because we're in the midst of something that is in the process of changing from what it was to something else. So let me explain. So, as a general comment, in 2025, we had a spectacular year, and many of our strategies significantly outperformed other things in the world that we could have done. And I can measure us against other firms and other strategies and how most people do. And so we had a standout year by nearly every measurement in 2025. And 2025 was a year when any number of things that were highly speculative and hard to value did well. So, in order to do well, you had to own some of those things, and we did. And we, we had some unusually good things happen on top of those things to explain why we had such a prosperous year. Well, the calendar flipped as we discussed last month. We decreased the level of risk coming into this earnings season to to respect the fact that one of these quarters, the expectations that were baked into prices at any given point wouldn't be exceeded. And I want to key in on that comment quickly because the prices that we see on any given day are a reflection of the entire investing world's feelings about the future prospects of the earnings of that company. That's kind of the loose definition of what stock prices at any given point represent. And when earnings expectations for the future decline, there can be some very unpleasant consequences. And we're seeing that every day, right? Small misses, huge downside. And we're seeing that, spread. So why I'm highlighting this period of time as a fairly serious moment is when stocks start to go down on good news, on a news report that would have sent them up 7 or 8% 3 months ago, are now sending them down 5 or 7 or 10%. And currently what's under assault is the small to mid to large software businesses that have become super common in the market and in lots of indexes, and the selling has been indiscriminate the last several days. And we have been affected by that, and we've taken some steps that you will all see and comment on, I'm sure, to reduce the level of heat. But my general point is that is what the theme is of this current period, the last 8 or so market days. Even good news is taking stocks down. So what is being challenged is when we are in these moments, right? You've heard me talk about swirling winds and cross currents. And so what's happening is the earnings reports that are coming out, the forecasts for the remainder of the year are coming in not higher than what they were. So there's no reason to mark up your estimates for the future based on the guidance that they're giving. So that means that whatever positive expectations that the market has a tendency to bake in are probably going to need to be marked down. And I've referred to this many times in this video, that when future earnings expectations are falling, prices will follow. And so right now, to go back to our trusty chart that we always look at, the 2026 estimate for S&P 500 earnings are $309 for S&P 500 earnings. If you take the guidance that we've seen over the last 5 days and extrapolate it into the next 4 quarters of this year, you would get a number under $300. So the difference between 309 and under 300, maybe we could quibble about whether that's significant or not, but the market is in a shoot first and ask questions later mood. Let me remind everyone, we have been through this so many times before. As recently as mid last year, and before that Liberation Day, and before that any number of dozens of times since I've been doing these videos, which is a small fraction of the time we've been doing this job. But you have to pay attention to when the winds change, and they have changed. So it changes how we will have to play the strategy and the hand, because we don't have the luxury, or we don't choose to take the position that we'll just ride it out, whatever it is. We're just going to stay put and ride it out through the storm. I prefer, and I'll move metaphors to turbulence. If we can steer around turbulence, and even if it takes us an extra 5 or 10 minutes to get to where we're going, but it reduces the nausea of the ride, I will almost always, depending on the strategy, take that path. And what that means for us is lower the dial on risk, sidestep the bar fights, head on a swivel, ready for making moves into the next chapter of what is next. And we have many things that we already own that are probably in that group. So then we will simply transition more into those things that are working well. The great news about all of this is where the market is moving to are the type of companies that we prefer to traffic in anyway. Real businesses, secular growers, make gobs of earnings, plow those earnings back into their own businesses, and create larger businesses with greater future opportunities. So the world sets up nicely for us in that way. But you have to get out of the way of the rocks that are falling from the hillside. So you would first have to dodge those, and then we can get onto something more fundamental and I believe more pleasant, which I still believe will be, mid to late this year. We do have to get through this excess speculation. One of the great truths of this is, and I have to say this in a way not to be disrespectful or glib, everyone will be punished. Whatever your style is, however your favorite style of play is, it will go out of favor and you will be punished. You will have to do your time in the desert. And so the people that have been wildly speculating for some bit of time now and been rewarded for it are getting their beating now. So it will pass. And when we think that what the moves will be is, if we have something that we can upgrade into something that we like more, that's a great opportunity. And then, as we typically do, the things that we own, even if they're going down, and you've seen it many times, we will continue to add in slow increments as something pulls back, and then have a larger position as we believe it will eventually rebound. So all of these things are underneath the hood. Happy to talk about them in any level of detail. On a more bright note, we did have a great January, many new people in and around the firm. So thank you for that. Jackson's doing a wonderful job, as is the ops team. Anytime you have a question, please reach out to somebody. At the end of the day, despite the seriousness of the moment, we are doing what we always do, sitting on the wall, as I said earlier, head on a swivel, ready for whatever comes next. So unless things get real serious in the next couple of weeks, probably check in early March. End of the day, we're here as we are every day that the market's open, trying to do the very best work we can for you. We appreciate your trust. It's never lost on us who we work for, as I often say. And we will catch you next month, if not sooner. All right. Bye-bye, everybody.